My name is Mohsin Quyyum. Today we are going to start a very important and very interesting topic, overheads. When we talk about overheads, overhead means indirect cost. Overhead means indirect cost. The word overhead is used for indirect costs. As you guys remember, we have learned a cost classification of direct and indirect cost. There we said sum of all direct cost is called prime cost, whereas all indirect costs are accumulated under single head called overheads. So overhead means indirect cost. It could be indirect material, indirect labor, or indirect expense. The purpose of this chapter is to analyze overhead costs and to convert them from total to per unit form so that we could be able to charge our overhead cost to our prime cost to get our total cost of the product unit or service unit. So there are two things that we are going to do in this chapter. One is the analysis of indirect cost, and the second one is to convert overheads to cost per unit. For this, we will cover in this chapter. First, we need to understand the difference between revenue and capital expenditures, production and non-production overheads, allocation and apportionment, reapportionment methods, overhead absorption rates, difference between blanket and departmental rates, under or over absorption, and the treatment of non-manufacturing overheads. These are the areas that we will cover in this chapter. Now, moving on to first point, which is revenue and capital expenditures. Now, what is revenue expenditure? Revenue expenditures are expenses incurred to maintain existing fixed assets or to run the business. For example, advertisement, depreciation of machinery, maintenance of machinery, etc. Revenue expenditures are charged through profit and loss account as an expense. Now, capital expenditures are the expenses incurred to improve the life and efficiency of the assets is called assets, or the expenses incurred to acquire non-current assets are also called capital expenditures. Capital expenditures are capitalized as fixed assets and they are capitalized and charged into statement of financial position, and the depreciation on such assets is charged to profit and loss account to write off the capital expenditure over the period. Now, moving on to the next point is production and non-production overheads. Indirect costs are of two types. One, which are related or incurred for production purposes. For example, nails and glue used in making chair, depreciation of machinery used in manufacturing products, supervisor salaries, etc. And some indirect costs are incurred for non-production purposes, like for selling goods, for distribution purpose, for administration purpose, or financing the business, etc. Such indirect costs which are incurred for production purposes are called production overheads, and those who are not related with the production are called non-production overheads. Treatment. Overheads are not charged directly to cost units. They charge to cost centers where they convert it into unit rate and then they become part of the total cost. Without calculating the overhead unit cost, we cannot be able to get the total cost per unit, so we cannot set the selling price without having the total cost. Cost centers are of two types: production cost centers and service cost centers. Production cost centers, those centers or departments that actually produce goods which are directly involved in making products, like assembly department, finishing department, cutting department, designing department, stitching department, machining department, etc. There are a lot of production departments. And some centers which are not directly involved in making goods, rather they provide necessary services to production cost centers like stores department, maintenance department, canteen department, packing department, etc. Now moving on to next, the process of charging production overheads is to share out all of overheads among the cost centers. Cost center means production cost centers and service cost centers. Then share overheads of service cost centers to production cost centers and charge them to, or you can say convert them to cost units. So this is the whole process. For doing all these things, there are 4 steps of charging overhead cost to cost centers and cost units. Number 1, allocation. 2, apportionment. 3, reapportionment. 4, absorption. Now let's deal them one by one in little bit detail. First is allocation. So what is allocation is costs that relate to a single cost center are allocated to that cost center. This process is known as allocation. Mostly indirect material and indirect labors are allocated. It relates to the costs that can be identified with specific cost centers, which is why it is directly charged to the cost centers or cost units. Let's suppose we have 2 departments. One is department A and the other one is department B, and we bought a machine which has an insurance cost of $5,000. Now, what if the machine is only used by A department? B doesn't get any benefit or use machine. So, machine is solely purchased for department A and solely used for department A. So all the expenses relating to the machinery like depreciation, maintenance, insurance, etc. will be charged only to department A because machine is only used in department A. So the expenses related to the machine is solely related with the product A. So it is charged to A, not B. So this process is known as allocation. Charging the cost to a specific cost center is called allocation. Now moving on to next slide, that is apportionment. Now let's start. What is apportionment? We do apportionment for common expenses, means the expenses incurred for more than one cost center. Apportionment where overheads is common or combined to more than one cost center and therefore needs to be shared out amongst the relevant cost centers on the basis of benefits received by each cost center. It means we share common cost between different departments, but remember it didn't split equally. It will be shared on the benefits the cost centers have received. We share this cost on the basis of this formula, like department base into common cost divided by total base. Here base means the information we used to share the common expense. Now again continuing our previous example of department A and B which we took for allocation. In that example, the whole expense was incurred for the department A. What if we say the machine is used by both departments A and B? It means now the machine is not only used in A, it used in B also. So the expenses relating to the machine usage are not only associated with A, they are now also associated with B. So these expenses will be shared between A and B on the basis of the usage of machinery both departments have done. Here we have some examples of common expenses, common costs, and the related base information which is used for the sharing of these costs. Like for rent and rates, the base information we used is floor area or space occupied. For lighting and heating, we normally use floor area and space occupied. For power, we use kilowatt hours or capacity of the machine. For employee related costs, we use number of employees or wages cost, or it could be labor hours as well. For depreciation of machinery and for the insurance of plant and machinery, we use value of machinery, or we can use machine hours as well. So we have choice here. For canteen, we use number of employees as a base information. Now moving on to next slide. Here we have an illustration. What it says is the total rent cost of an organization is $20,000. Remember, this cost is of whole organization. The total floor area of the building of the organization is 1 lakh square feet. The assembly department takes up 6,000 square feet and the stores department took 10,000 square feet. How much of the total rent should be apportioned to assembly department and the stores department? So here the point is the illustration is related to the apportionment of rent expense between assembly department and the stores department. The overhead cost will be apportioned on the basis of square feet. Assembly department is on 6,000 square feet, whereas stores department contains 10,000 square feet, whereas the total area of the building is 1 lakh square feet. A department consists of more square feet will be shared the larger portion of the rent expense. Now let's solve the example. First, we are going for assembly department. Assembly is consist of 6,000 square feet divided by total 1 lakh square feet into the expenses $20,000. Now the assembly will be charged $1,200 out of $20,000 on the basis of the square feet. Now for stores department, stores consist of 10,000 square feet divided by total area 1 lakh square feet into 20,000. Stores share will be $2,000. So this is how the apportionment done. The common cost is shared between the departments on the basis of the benefits they receive. Now moving on to the next slide, that is about reapportionment. Now what is reapportionment? Reapportionment is the process in which we apportion service department's cost to production cost centers and the balances of the service departments comes to zero. This process is known as reapportionment. Here he says service departments are cost centers which exist to provide services to other departments. The canteen is a common expense. Having collected and apportioned cost to the production and service departments, the totals of the service cost centers then later needed to be reapportioned to production cost center. So by doing this, the service department cost will be charged to production cost centers, then centers totals will become zero. In doing so, the service department cost will charge to production centers will ultimately become part of our production cost. So in this way, our service center cost will also recover from the sale of product. Here we have some basis of reapportionment. The procedure is similar to apportionment. The difference is only here the formula is for reapportionment department base into service center cost divided by total base. Here base information, this formula is exactly same as like apportionment, but here we are apportioning the service center balance. Service cost centers include stores, maintenance, and canteen. For stores, we use base information like number of material acquisitions. For maintenance, we use number of maintenance hours or number of maintenance calls. And for canteen, we use number of employees. Now, moving on to next slide, there are two methods for the reapportionment of overhead cost. One is direct method and the other one is indirect method. In the direct method, we ignores work between service departments, which means service centers cost will be reapportioned only to production departments. This method is suitable when the service departments only provide services to production cost centers and they didn't exchange services between themselves, which means if we have two service centers, stores and maintenance both provide service to production centers, they do not exchange services between them. Means stores didn't give any service to maintenance and in response maintenance is not giving any service to the stores. So direct method is suitable when service departments do not exchange services between them. The other method is indirect method. Indirect method have further split into two methods, step down method and the other one is reciprocal or repeated method. Reciprocal or repeated method. In step down method, which is also called one-way method, one service department provides services to the other service department, but other do not. Service department which provide service to the other department is reapportioned first. It means again continuing with stores and maintenance. It means if stores department provides service to the maintenance department and maintenance does not provide any service to the stores, then it's a one-way method. One service center is giving service to the other and the other does not. So in this situation, we use step down method. For step down method, if stores give service to maintenance, then stores will be reapportioned first and then the maintenance. Whereas in reciprocal method, which is also known as two-way method, is when service departments provide services to each other. Full recognition is given for all work done by the service departments for each other. It may be solved with algebraically by simultaneous equation or through repeated distribution method. It means if we have two service departments, stores and maintenance, it is a situation when stores give service to the maintenance and the maintenance is also giving service to the stores. In such situations, we prefer reciprocal method. Now, what we have here we have an example. This example is for reapportionment and for direct method. Why direct method? We can see from the information given in the question, we have total after apportionment. Production department A have $10,000 overheads. B has total $20,000. Stores have $500 and maintenance have $200. Stores and maintenance are service cost centers and as from the names, these two are production cost centers. When we reapportion stores gives 45% of its total value 500 to production department A and 55% to production center B, and it means stores is not sharing its cost with the maintenance. And when we reapportion the maintenance gives 60% its cost to production center A and 40% overhead cost to production department B. Here again you can see maintenance is not sharing its cost with stores. So neither store gives service to the maintenance and maintenance neither gives service to the stores. Both service centers give service to the only production departments A and B. So when we will reapportion them, their cost will only be reapportioned to production departments. Now let's solve them. Production center A, production center B, stores and maintenance. After apportionment, total of A was 10,000, B was 20,000, stores was 500 and maintenance was 200. So when we make reapportionment, first we go with stores. Stores will share its cost of 500, 45% of 500 to production center A as given in the base information. So which is $22.25 and stores will charge 55% to production center B which is of $275. So when we charge 500 to A and B, so it will be eliminated from stores department because we share it between A and B. And when we reapportion maintenance will charge 60% to department A of 200 is $120 and 40% to production center B which is 80, nothing to stores. So we will subtract it from here. Budgeted production overheads. The total would be 10,345 and 20,355. After sharing the balance of stores and maintenance to production centers, the balance will become nil for both stores and maintenance. So this is how we reapportion the stores and maintenance departments cost to production centers in direct method. Now moving on to next slide, here we have another illustration relating to step down method. Remember guys, step down is the method in which one service center provides service to the other but whereas the other does not. If we see the information total after apportion, for production center A is 10,000, for center B is 20,000 and for stores is 500 and for maintenance is 200. When we reapportion stores charge 40% of its cost to A, 50% to B and 10% to maintenance. Here store is charging 10% of its cost to maintenance because stores has provided 10% services to maintenance. So it will charge 10% of its cost to maintenance. Whereas when we reapportion maintenance charges cost 60% to A, 40% to B and nothing to stores, which means stores give services to maintenance and maintenance has given no service to stores. So now when we reapportion them, what he said, reapportion service cost center overheads to production cost centers by step down methods. Now let's solve them. First I will put the names and data A, B, stores and maintenance. After apportionment, we have balance 10,000 for A, 20,000 for B, 500 for stores and 200 for maintenance. Now let's reapportion them. When we reapportion them, the service center that charging its cost to other service center will be reapportioned first. As from the question, it is clear that store is charging its 10% of its cost to maintenance. So first we need to reapportion is the stores department. Guys, remember this is the only method in which you have to consider the sequence. In other methods, there is no condition to maintain the sequence. So when we reapportion the stores, we will charge 40% to A, which is 200 of 500, 50% to B, which would be 250, and 10% to maintenance, which is 50. After charging the stores, after reapportioning the stores, we will net them 10,200, 20,250. Nil balance for stores, and now maintenance has a new balance, new amount, which is 250. Now, when we reapportion the maintenance, we will reapportion the amount 250, not the 200. The reason for reapportioning stores first was that so that we get the total value for the maintenance. Now, when we will reapportion the maintenance balance, we have 250 balance. 60% of 250 will be charged to A, which would be 150, and 40% to B, which would be 100, and nothing to stores. So the maintenance balance will become nil. Store balance is already nil. Total of B would be 20,350. Total of A would be 10,350. So this is production, wasted production, overheads. So this is how we reapportion service centers to production centers in step down method. Now moving on to next slide by using reciprocal or repeated method. In this example, it says we have total after apportionment 10,000 for A, 20,000 for B, 500 for stores, and 200 for maintenance. When we reapportion the stores, stores will charge 40% of its cost to A, 50% to B, and 10% to maintenance. When we reapportion maintenance cost, it will charge 60% of its cost to A, 20% to B, and 20% to stores. It means both service centers are charging their cost to each other, which means both service centers have shared services between themselves as well as with production departments. Now let's solve them. Before we solve the question, I would like to write the basic data. So after apportionment, we have balance for A is 10,000, for B is 20,000, for stores it is 500, and for maintenance it is $200. It would be better if we have currency sign in the heading. Now let's reapportion them. Here you can reapportion any one of them first. There is no condition or barrier of sequence. So if we reapportion the stores in sequence, then stores will charge 40% of its cost to A, which would be 200, 50% to B, which would be 250, and 10% to maintenance, which would be 50. We will net off them. Here we have 10,200, 20,250. Stores balance nil, maintenance balance 250. When we reapportion maintenance, we will charge 60% of 250 to A, which would be 150, 20% to B, which would be 50, and 20% to stores, which would be 50, and we will subtract 250 from here. Nil balance for maintenance, 50 balance for stores, 20,300 for B, and 10,350 for A. Now let's reapportion. Now as you see, we have reapportioned one time each. When we reapportion stores, the stores balance become nil. Then we reapportion maintenance then maintenance become nil, but stores again got some balance. So now we can see store still have 50 balance. So we will reapportion stores department again with the same base information, 40% to A, which would be 20, 50% to B, which would be 25, and 10% to maintenance. After this, we will have balance of 10,370 for stores, 20,325, stores become nil, and now maintenance still have balance of 5. So what we have to do is we have to reapportion maintenance department with the same base information, 60% to A, 20% to B, 20% to stores. When we net off them, the balance of maintenance would be nil. Stores would have 1, 20,326 and 10,373. When we will reapportion them, as we can see, stores still have the balance of 1. So we will continue this process till the both service centers becomes nil. So now we still have the balance of 1 in the stores department. So we will reapportion the stores department again with the same base information. But here we can see the balance is very nominal. So here we will go for the round off. We will charge complete 1 to the department to whom stores have give the most services, which is B, because stores have given the 50% of its services to B. So we will charge complete 1 to B, and the other two departments balance would be nil, 0. After this, we will got 10,373, 20,327, stores balance nil, maintenance balance nil. So this balance will be called budgeted production overheads. This is how we reapportion the service centers balance to production departments. Now moving on to the next slide, as we have covered allocation, apportionment and reapportion up till now, but still the overhead cost is in total form. Remember at the start we said we have to do two things in this chapter. One, the analysis of overheads, and to calculate the per unit charge of overhead cost. So after allocation, apportionment and reapportionment, we have performed the analysis, but we still have the cost in total form. So in the fourth element, absorption, what we are going to do is we are converting the total overhead cost into the unit cost. The method including a fair production of the total overhead cost as part of the cost of each cost unit. What does it mean? It means we are converting overheads from the total to unit charge. The amount of overheads that is to be treated as cost of each cost unit or product is calculated using the overhead absorption rate. What is overhead absorption rate? Overhead absorption rate can be calculated as budgeted production overheads divided by budgeted activity level. The total of the overheads in each production departments must now be absorbed into the unit of production on the following basis. What does it mean? It means we can calculate overhead absorption rate on the basis of 7 different activity levels. Those 7 activity levels are: number 1, direct labor hour basis, machine hour basis, units of production. If we use direct wages cost, direct material cost, prime cost, full production cost. When we use the activity level of direct labor hours, the OAR will be like X dollars per direct labor hour. We call it as X dollar per direct labor. X means any number, any rate. When we use machine hours, then we have Y dollar per machine hour. It means when we use one machine hour, we have an overhead cost of Y dollar. For units of production, we calculate the rate which is called as Z dollar per unit for standard units only. Remember guys, for the standard units only. But when we have these 4 costs as an activity level, then the additional thing we do in the formula is we multiply it with 100, because when we have these four as an activity level, then the formula contains cost in numerator and denominator as well. So there is a need to multiply it 100 so that we got a proportion or percentage of overhead cost. So in this way we get overhead absorption percentage. Now moving on to the next slide. In next slide we are having an example. In example, the following data was collected for a water supply factory. Production overheads 20,000. So these are the overheads. Direct labor cost, direct material cost, direct labor hours, machine hours, production units. What we need to calculate is we need to calculate the OAR using each of the following as an activity level. So we need to calculate OAR using these activity levels. For using these activity levels, here I would like to tell you how we will get our prime cost. Prime cost is the sum of direct cost. In this example, we have two direct costs, direct labor and direct material. So our prime cost would be $26,000. And when we have to use production cost the sum of prime cost and production overhead. So our production cost would be $46,000, which is sum of production cost and the prime cost. Now let's move on to the solution. In the solution, we have to calculate the OAR. Now we are calculate one by one. So first requirement is requirement A, which says calculate the OAR if activity level is labor hours. So vested overheads $20,000 divided by 2,000 hours. So the overhead absorption rate would be $10 per direct labor hour. This shows whenever our labor does 1 hour work, $10 overhead cost will be absorbed. In B, we are going to calculate the OAR using the activity level as machine hours. Overheads are $20,000 divided by 4,000 machine hour. So the overhead absorption rate would be 5 per machine hour. It means whenever we does work 1 machine hour, then $5 overhead cost will be absorbed. Now moving on to C. C is with respect to direct labor cost as an activity level. So overheads $20,000 divided by direct labor cost, which is 16,000 as given in the question. Here we will multiply it with 100 as we have cost in numerator and denominator as well. So we need to multiply it with 100 so that we get an overhead absorption percentage of 125% of direct labor cost. For D, here we are going to calculate the overhead absorption rate using material cost. So $20,000 divided by 10,000 material cost into 100. Now the overhead absorption rate would be 50% of direct material cost. Now move on to E. E is if activity level is prime cost. So as I told you earlier, we will take the prime cost as an activity level, which is 26,000, which is sum of direct material and direct labor cost. Here we need to calculate it with 100. So the overhead absorption rate would be 76.92% of prime cost. It means for a project, our overhead cost would be 76.92% of the prime cost. In F, we are going to calculate the overhead absorption rate by taking production cost as an activity level. So it would be like 20,000 production overheads divided by production cost, which is 46,000, which is sum of prime cost and production overheads. So the overhead absorption rate would be 43.48% of production cost. G, the last one, it demands OAR on production unit basis. It means production overheads divided by production units, which are 2500 units. So here the base is units, so no need to multiply it with 100. So the overhead absorption rate would be $8 per unit produced. It means whenever we produce one unit, $8 overhead cost is incurred. Hopefully, you understand the basic concept of overhead absorption rate. Now, moving on to the next slide. Here it says there are two types of overhead absorption rate systems which are used in absorbing the overhead cost. One is blanket rate system and the other one is departmental rate system. Blanket rate system is when a single OAR is used for the whole factory or organization. It means all departments will absorb its overhead cost on that rate, on a single OAR rate. It is appropriate if the company has fewer departments, fewer but similar products, similar processing. Only such situations we can use blanket rate system. With this use, some products will receive higher overhead proportion and some will be undercharged because it is not necessary that the base we used to calculate the OAR is suitable for the all departments in the organization. Let's suppose we have calculated the OAR on the basis of machine hours. So it is not necessary that every department's work is dependent on machine hours. Some departments is very much depend on machine, some depends lesser on machine, and some departments have no use with machine. So the departments which have low machine hours or which have no machine usage would be charged lesser or no overhead cost to the department. But the departments which are dependent on machine hours would be charged the higher proportion of overheads, which is unfair. So in blanket rate system, the accuracy of overhead cost is lesser. So as a result, what we need to do is, in such situations, we prefer departmental rate system. Departmental rate system is used where separate rate for each department or cost center is calculated. Each department calculate its OAR on the basis of activity which is most suitable for the department. It is appropriate when company has more departments, have diverse range of products. So in such situations, departmental rate system is very suitable. Now here we have some comparison between blanket rate system and departmental rate system. The use of blanket rate system saves time, thus cost, but less accuracy than departmental rates. Therefore, a careful selection of which type of rate is to use is essential, taking into account the cost benefit analysis. Then the companies decide whether they go for blanket rate system or they will go for departmental rate system. Now moving on to the next slide, which is under or over absorption. As we just learned that overheads are absorbed on predetermined overhead absorption rate. I've used the word predetermined because it is calculated in advance or at the beginning of the year on the basis of budgeted data. So, in charging overheads, overheads are absorbed on the basis of actual activity level. So, if actual activity level and budgeted activity level are not the same and budgeted overheads are not equal to budgeted overheads, so there is a chance of under or over absorption of overheads. There is only one situation in which there is no where under or over absorption is nil, and that situation is when actual activity level is equals to budgeted activity level, actual overheads and budgeted overheads are equal. So only in this situation we can say there is no need to under or over absorption. But if actual overheads are not equal to budgeted overheads or actual activity level is not equal to budgeted activity level and or both are not equal, then there is a possibility that the overheads that we absorb into our production cost might be under or over absorbed as compared to actual overheads. So to clear this confusion, we need to use under or over absorption of overheads. Overhead absorption rate is based on budgeted overheads and budgeted activity level. So absorbed overheads may be different from actual overheads, as I earlier said. Under or over absorption is the difference between two things: absorbed overheads and the actual overheads. Absorbed overheads are calculated as actual activity level into OAR, absorption rate, and the answer of this calculation is compared with actual overheads. So if there is any difference, the difference is either under or over absorption. If absorbed overheads are higher, then it means there is an over absorption, overcharging of overheads as compared to actual. But if the absorbed overheads are lower, then it means under absorption, means undercharging of overheads as compared to actual. We need to settle this under or over absorption in the SPL. So with the adjustment of this under or over absorption, we will equal the absorbed overheads with the actual overheads. Here he gives the formula as we talked earlier. Absorbed overheads, actual activity level into OAR, which are absorbed overheads, actual overheads. Now comparison of absorbed overheads and the actual overheads, the difference is under or over absorption. He is saying if absorbed overheads are greater than actual overheads, then over absorption, deduction from the cost of goods, or the other treatment is to add in the GP, addition in GP. If absorbed overheads are less, it means we have charged lesser cost, less overhead cost, so add it to cost of goods sold or deduct from the GP. So both treatments are equally acceptable. If actual overheads incurred are not given, then an assumption can be taken that budgeted overheads are equal to actual overheads. Vice versa with budgeted activity level and actual activity level. Here, under or over absorption of overheads will occur if actual overheads are different from budgeted overheads, actual activity level is different from the budgeted activity level, or both situations arise. In these three situations, we need to clear the confusion whether the overheads that we have charged into our production costs are equal to our actual overheads or not. If there is a difference, then we need to adjust it into cost of sale or in the GP to make the absorbed overheads equal to the actual overheads. Here we have an example number 6, in which we will calculate under or over absorption of overheads. For under or over absorption of overheads, first we need to calculate the budgeted units. We need budgeted overheads. Here we have budgeted overheads, budgeted production. These two things we require to calculate the OAR. Then we have actual units, which will be used in the calculation of absorbed overheads, and we have actual production overheads. Now let's solve the illustration. In the solution, we first need to calculate the OAR. OAR be like budgeted overheads 200 divided by budgeted activity level, which is 100 units. That would be $2 per unit. So this is our OAR. Now we can calculate absorbed overheads. Absorbed overheads can be calculated as actual activity level 120 units into OAR, which is 2. So we will have the absorbed overheads as $240. Now we will compare it with actual overheads. Actual overheads are 230. 240 overheads are the overheads that we have charged into the production cost, but the actual overheads incurred in the period are 230, which means we have over absorbed $10 overheads into our production cost. So there is an over absorption of, which means we have charged more overhead cost to our production as compared to actual. So this excess $10 will be added back to our profit or to less from the cost of goods sold. So this is about the under or over absorption of overheads. Now move on to non-manufacturing overheads. Remember, apportionment and reapportionment of overheads is used only for production overheads. Non-manufacturing overheads are not apportioned or reapportioned because normally the non-manufacturing overhead costs are solely belong to non-production functions, like administration cost directly is associated with the admin cost, marketing associated with selling cost, and distribution associated with distribution function. So they just allocated and absorbed on fairly basis and will become part of product cost. So we cannot complete our total cost until we charge non-manufacturing overheads to our production cost. So then we can only get the total cost. Non-manufacturing overheads may have allocated by choosing basis for overhead absorption rate, which fairly reflects the non-production overheads. So the basis for apportioning the non-production overhead is, there are two options available. Number one, choose a base for apportioning non-manufacturing overheads which fairly reflects non-manufacturing overheads such as, or they can be calculated on the basis of direct labor hours or machine hour if the non-manufacturing overheads are fairly reflected with such basis. Or the other way is, the second method is to allocate non-manufacturing overheads to product on the basis of product's ability to bear such cost. For example, manufacturing cost may be used to apportion non-manufacturing cost to products by using overhead absorption rate. Estimated, the overhead absorption rate used to calculate is estimated non-manufacturing overheads divided by estimated manufacturing means production cost into 100. So any order, whatever our production cost is, we will charge our non-production overheads to that activity on the basis of such overhead absorption percentage. So then we will be able to get our total production cost. So non-production overheads can be based on, in short, the summary is non-production overheads can be based on labor hours, or they can be based on machine hours, or they can be like the percentage of production cost with this equation we have discussed here. Guys, this was all about the overheads. Like in this chapter, we have studied allocation, apportionment, reapportionment, and then absorption. In doing so, we analyzed our overhead cost and we calculate its unit valuation as well. If you have any issues or concerns, you can ask me. Thank you very much.